I'm going to explain here what is the running Musharakah structure and how does it work. Suppose a case in which Mr. Khalid is a corporate client, he is a factory owner or the company owner, he needs money for the working capital to run his business. 1 minute. So he is a company owner. He needs money. He visits bank and approaches an Islamic bank management, requests them, it agrees to finance him through running Musharakah facility. After satisfying from financial performance of Khalid's business, how they will come to know that Khalid's business is performing good? They actually analyze the financial performance of his company by the financial statements. They ask income statement, cash flow statement, balance sheet. From there, they examine that how the business of Khalid is running. After satisfying that, okay, the business is okay and it is performing well, they agree to finance him under the running Musharakah facility. So under the terms and conditions of contractual partnership means Shirkatul Aqd. There are two types of shirka. One is Shirkatul Aqd and other is Shirkatul Milk. So on Shirkatul Aqd base, they sign the contract. So Islamic Bank becomes a non-active, mean sleeping partner in Khalid's business for a specified period like 1 year. So under the contractual agreement, under the Shirkatul Aqd. Profit is determined between the Islamic Bank and Khalid on 2 levels. So they determine profit on 2 stages, on 2 levels. However, profit distribution mechanism is decided in a way that at first level, profit will be distributed according to their investment shares up to the amount equal to Khyber, say 14% of total Musharakah investment from unearned total profit, total future